Hi, in this lesson, I'm going to show you how to do this question. This one, number one, 2009 paper 2 question 5, and this 2008 paper 2 question 2. And then you will have to redo all these 4 questions on your own later on. Okay, this 2009 paper 2 question 5 is quite difficult. Okay, this one, Pebbles Limited manufactures standard office partition. The partition consists of metal frame and fiberboard panel. The works manager is concerned about stock control procedure in the company. He has given the following data relating to September. Okay, so this one, the result of physical stock take at 1st September and 30th September. Okay, so you have metals, fiberboard. So this company is manufacturing office partition, and then the partition consists of metal and fiberboard. So on 1st September, when they do a stock take, that means they go and thoroughly count the stock. They find that they have this quantity of metal and fiberboard, and then completed partition is so much. And then work in progress, that means those partially completed number of partially completed partitions are so much on 1st September and 30th September. Okay, let's look at what the question wants. You should have the question in front of you. A, calculate the quantity of metal and fiberboard issued to production in September. So what can you understand? Okay, so you see, in the factory environment, you will have the store. The store you will have a store, and then the store will have a storekeeper which control the incoming and outgoing of the stock, and then you will have what do you call this one, production department. So that means the store manager, or so-called a storekeeper, will issue to the production department. Okay, so they said calculate the quantity of metal and fiberboard issued to production in September. So I can do it in such a way that without thinking too much, I'll put here, this is part A. So quantity issued to production in September 2009, metal, quantity, right? So metal will be bracket meters and fiberboard will be bracket square meters. Okay, so without thinking too much, I do the title and then I put metal and fiberboard in order to cater to what the question wants. Okay, then now I look into this again. So degree of completion, 1 September means 900 partition has been issued with 60% metal and 40% of the fiberboard to complete the partition. Okay, during September, company sold so much, 6,003 partition. The works manager estimate, that means the production manager estimates 7 meter of metal and 12 square meter of fiberboard are used to make one partition. These figures include allowance for normal wastages. Purchase price of opening stock of raw material was so much. Okay, so now can we so-called drill into our mind to digest what the question was? Calculate the quantity of metal and fiberboard issued to production in September. Okay, then he says that during September, raw material were purchased as follows. Okay, this is the raw material purchase. So then now we can understand, from purchase, the purchase will go to the store. The store will be managed by the storekeeper, also called a store manager, and then the store will issue to production. Okay, then the production part will so-called will do the production, and then after they finish the finished goods, maybe it will transfer to the sales department, and the sales department will sell it out. So you can imagine the process. Okay, so number 6, store issued to production using first in first out basis of pricing were as follows. So this one, stores issued to production. Okay, this one, isn't it giving us a hint of how to answer the question? So you should have the question paper with you. The question says, calculate the quantity of metal and fiber board issued to production in September. But over here, it gives you the price of the metal and fiber board issued to production. So this number 6 here is giving you a hint, a very strong hint to answer this part A of this question. So you have 11 September, metal and fiber board. This is the price that was issued to production. So I put here 11 September, and then I leave quite a lot of space. I can even leave more space. Okay, and then there's another one at 21 September, and then there's metal and fiber board. Okay, on a first in, first out basis, okay, issued to production, you see the purchase price of opening stock means opening stock at 1st September is so much. Then during September, raw material were purchased at this quantity and this price. So when you issue also first in, first out, so that means the first price that come in will go out first. Then the subsequent price that come in will go out second, and so forth. Okay, so now so now 11 September. So can you please have your question paper in front of you? Okay, so 11 September, I have my workings here. Okay, so you see the part, the note 6, 11 September, metal is 324,000. Okay, so we are going to, in our mind, we are going to calculate how much is the quantity of metal on 11 September that was issued to production. Okay, you see, the opening stock, you see the opening stock, that means at 1st September, the opening stock of metal is 12,000. Okay, have your question paper in front of you. The opening stock of metal is 12,000. And the opening stock, the price per unit for opening stock of metal is $15 per meter. So 12,000 meters would have gone out, would have gone out of the from the store to production, and the transfer pricing, I mean the price that was taken for this transfer from stores to production was $15 per meter, as stated in part 4. The purchase price of opening stock of raw material was $15. So that means the first batch that was gone out, I mean the 12,000 of the opening stock would have gone out to production, and it was valued at $15. The purchase price was $15, so this one is 180,000. So the question, the part 6 of the question, note 6 of the question says that on 11 September, 324,000 of metal gone to production. So that means the balance. So that means this 324,000 minus 180,000, which is the cost of the opening stock of metals that gone out to production, then that means that will give you 144,000. So 144,000, the balance 144,000 must be the price of the second, the price of the subsequent incoming metal, which costs $16 per meter. So that means the quantity of the subsequent so that means this 144,000 I divide by $16 will be equal 9,000 meters, which means after they have issued all the opening stock, they subsequently issued another 9,000 meters of metal to production. So that means on 11 September, the quantity of metal issued to production was 21,000, which in short, we have actually obtained this 21,000 from by converting this 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 cost uh, this cost into quantity, um, based on the unit price, based on the unit cost price of the metal on a first in first out basis. Yeah, so that means this one is opening stock would go out first, then subsequently the 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 subsequent incoming stock would go out. So it's on a first in first out basis, using the cost of on based on the first in first out. Okay, so then on 21 September, okay, so the question says the cost of the metal that issue to production is 389,500. So so the the so that means, you see, the purchase on 8 September is 22,000. Okay, out of these 22,000, 9,000 meters was issued to production on 11 September, like we have calculated here. So 22,000 minus 9,000. So what is 22,000 minus 9,000? So you will take your calculator to count. 22,000 minus 9,000 is 13,000. Okay, this 13,000 was the quantity of 13,000 was issued to production in 21 September, and the cost of this 13,000 meters of metal is $208,000. So that means the balance cost will be 389,500, which is according to note 6 of the question, 389,500 minus this 208,000 will give you 181,500. So this 181,500 will be issued to production based on the next incoming purchase, which cost $16.50. So in order to know what is the quantity of this metal issue to production, you take 181,500 divide by 1650, you get 11,000. Okay, so 11,000 on 21 September. So that means the total that was issued to production on 21 September will be 24,000 meters. So this is the quantity of metals issued to production. Okay, so why don't you, since I've explained thoroughly for metal, fiber board is actually based on this similar calculation. So why don't you copy down these figures, and then you can do your own workings, based on the same principle as metal. Okay, then now we can go to part B of the question. Calculate the quantity of stock and of metal and fiber board that should be in the store at the end of September. State the quantity of metal and fiber board unaccounted for at the end of September. Okay, so how are you going to write the heading? Okay, so this one I will have metal in meters and fiber board bracket in square meters. I leave a gap in between. So that means how are we going to do this? So they are saying that calculate the quantity of metal and fiber board that should be in the store at end of September. State the quantity of metal and fiber board unaccounted for at the end of September. So this is end of September, metal and fiber bought. Okay, so that means now knowing that in the factory you will have a store that is managed by a storekeeper, or you can call it a store manager, whatever name you put it. And then well, let's call it store manager. Um, okay, this store manager will be in charge of the store. Okay, he is answerable to the boss for 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 the store. Okay, and then there's another production department that is taken care and managed by a production manager. Okay, so the store manager and the production manager are two different persons. They will be in charge of their department. Okay, so the store manager um, is not answerable for whatever wrongdoings in the production department, and the production department will not be answerable for any wrongdoing in the store. Okay, the store manager will be answerable for any wrongdoing on the store. Okay, so that means you have to totally put yourself in the position of the store manager. Okay, so the boss is saying, okay, okay, so you all have do a stock take. The boss have probably get some auditors, or get some independent staff to come and check the store and calculate all his stock at 30 September. So the boss is asking the accountant, do you think these figures are correct? Did my store manager did anything funny? Did he steal some of my stock? So the boss is asking his accountant. So so now the boss is asking the accountant, calculate the quantity of metal and fiber board that should be in the store at the end of September, because I want to know if my storekeeper, or rather is my store manager honest? Did he steal any of my stock, or did he misappropriate any of my stock? Okay, state the quantity of metal and fiber board unaccounted for at the end of September. So that means he's saying that is 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 any of my metal or fiber board stolen, or something like that? Okay, so now we have an idea what the question is asking. So balance at 1 September. Okay, balance at 1 September, according to note 1 of the question, the metal is 12,000, and the fiber board is 20,000 on 1 September, right? Okay, so then purchased. Okay, under note 5 of the question, purchased. Purchased for metal, how much was purchased? Okay, you see on note 5 of the question, how much was metal purchased? The total purchase for metal in September is 22,000 plus 25,000. So the quantity purchased is 47,000. The fiber board, the quantity purchased for fiber board is 40,000 on 8 September plus 50,000, that is 90,000. Okay, issued to production. Okay, so whenever the store issue the production manager the store manager will make sure the production manager sign for what is issued to the production, so that later he won't get fired, for and be blamed for any missing stock, So the issued to production for metal and fiber board is what we calculated here. Okay, A and B. Okay, issued to, A for the metal is 45,000 and fiber board is 81,000. Okay, 45, 81. So the beginning metal at what is purchased minus what is issued to production will be quantity that should be in the store at end of September, 14,000 and 29,000. You see, if you put your mind in the position of the store manager, you will explain to your boss in such a way that, I don't care about the production manager, but from my point of view, from my responsibility point of view, I am the store manager. At the beginning of September, I have so much metal and so much fiber board. So we purchase, that means the incoming metal from the purchase is 47,000 in September and 90,000 for fiber board. And then my department issued to the production department so much. So that means the quantity of metal and fiber board that should be in the store at the end of September is so much. But according to note 1 of the question, the stock take shown that the metal is 11,000 and the fiber board is 22,000. So quantity unaccounted for metal will be 3,000 and fiber board will be 7,000. So then now we look at part C. Calculate the total quantity of each material that should have been used in production and compare this with the quantity actually used. Okay, so that means this one, the quantity unaccounted for, so that means the store manager should explain to a boss why is there some missing stock. I mean, the store manager could say that, oh yeah, some of the stock is kept in that corner, and it was left, it was not counted on the day of the stock take, or whatever reason. He could say that, on one day there was a theft and we actually lodged a police report, or something like that. So this quantity unaccounted for would be the responsibility of the store manager to explain to his boss. So now you look part C. Calculate the total quantity of each material that should have been used in production and compare this with the quantity actually used. So now you should put yourself, for part C, you should put yourself in the position of the production manager. Now it is the production manager's turn to explain to his boss. Calculate the quantity of each material that should be used in production and compare this with the quantity actually used. Okay, so so that means without thinking too much, I put metal bracket meter, and then I can draw a line. Here I didn't draw a line, but I can draw a line because probably I feel more comfortable that it will be neater. Quantity that should have been used in production, and I underline. Okay, so now you are the production manager. You will tell a boss, I am only in charge of the production department. This is my duty. Okay, so this one, you see, there's the purchase, whatever is purchased, it will go to the store, and then store will issue the raw material of metal and fiber board to production, and then production will produce, and then if there's a sales department, they will send it to their sales department, or probably from the production they will directly sell. So probably assuming that is okay, so whatever, you see, the store manager will explain to his boss, you see, the partition sold is in September 2009. The partition sold is 6,003. So that means the production manager will tell his boss, so the partition that is sold will go out from the production department because it is sold. So go out. So okay. So whatever is sold, so it will go out. So those that is go out would the metal would have consumed. Okay, in note 3, the work manager estimates 7 meter of metal and 12 square meter of fiber board are used in making one partition. Okay, so 7 meter of metal and 12 meter of fiber board. Okay, so those sold would have consumed so much metal and so much fiber board. Okay, so is gone out. Then there is a stock of completed partition. So the stock of completed partition would have consumed the metal and fiber board. So you see, now the production manager is trying to explain to his boss why he had used so much metal and so much fiber board. So he said, boss, you see, why I have used so much metal is um, because in order to produce the partition that was sold, I would have consumed 44,100 metal and 75,600 fiberboard. And you see, at the end of September, okay, at the end of September, at 30 September, there were 1,200 units, as in note 1, 1,200 units completed partition. And, and, and for producing that stock of completed partition, I would have consumed, I say the stock of completed partition is 1,002 units. In order to produce this stock of completed partition, we would needed to have used 8,004 metal and 14,400 fiberboard. And then you see, on 30 September, there was 600 units of stock of work in progress. Okay, in order to produce this stock of work in progress, okay, so you see the stock of work in progress, the degree of completion for metal is 75% and the degree of completion for fiberboard is 50%. That means the degree of completion of metal means they have put in the 75% of the needed 75% of the needed metal for producing this 600 partition. So so this production manager is telling the boss, you see, in order for us to produce this 600 units of work in progress of the partially completed partition, we need so much metal and so much fiberboard. So that explains sort of explained why we have consumed so much metal and so much fiberboard. And of course, we know that at the beginning of the month, um, at the beginning of the month, we were given we were given uh, so much opening stock. I mean, okay, so let's even make it a clearer situation that on September, this is a new production manager. The previous production manager resigned. Okay, so I'm giving an example. On September, this I'm the new production manager. So so I would tell my boss, you see, at the beginning of the month, okay, so this is why I consume so much metal. But at the beginning of the month, the previous production manager passed on to me so much 750 units of completed partition that will equate to so much metal, and 750 um, times 12 that will equate to so much fiberboard. And WIP that was given to me at the beginning of of September was so much. Okay. Okay, then okay. So they are saying that quantity that should have been used in production should have been used in production. Then you are asking me, then how about the raw material of how about the raw material of metal and fiberboard? How about this one, raw material of metal and fiberboard? So now I am the production manager. Okay, question C is questioning the production manager. So metal and fiberboard, this is the raw material of metal and fiberboard. This is not in the production department. So that means this is none of the production department business. This raw material of metal and fiberboard, this raw material is kept by the store manager, right? So this has nothing to do with the production manager. Okay, this has yet to be issued to the production manager. Okay, so from the production manager point of view, his business is to explain to his boss what was given to him, what was in the production department. He does not care what is not in the production department. The raw material of metal and fiberboard is not in the production department. Okay, only the completed partition and the work in progress is in the production department. So So this was what was left, what was given to the production manager, right? What was given to the production manager. So the sold at the closing stock minus the opening stock, minus this, these are the closing stock. So that means if you tally up all this, okay, this plus this minus this, the quantity that should have been used in production will be is actually so much. So what is the quantity actually used? Okay, so you see part A says quantity issued to production. So that now the boss is actually questioning the production manager. Okay, fair enough. The quantity, so the production manager is explaining to the boss, so the quantity that should have been used, okay, by us is 46,600, but we actually only use 45,000. So we have underused 1620. Okay, we have underused 1620. So for fiber board, the quantity that should have been used will be 80,280, and the quantity actually used is 81,000. Okay, it's 81,000. So that means we have so-called used too much. We have overused 720,000. Okay, why is there under or over usage? Okay, so if you go through and read the question properly. Number 3, the work manager estimates, work manager means production and manager, estimates 7 meter of metal and 12 meters. You see, estimate, look at the fine description, estimate. Metal and 12 square meter of fiberboard are used in making one partition. This figure include allowance for normal wastage during manufacture. So that means if the production manager underused, that means they have so-called saved on the wastages, okay, because that 7 meter include allowance for normal wastages. So that means if they have wasted less than the allowed wastages, they would have underused. So, or maybe if they have used more than the allowed uh, wastages, then they would have overused. So part D of the question says, comment briefly on the possible causes of any stock difference in September. So why is there stock difference? So one of the um, reason that you can say that there could be wastages which is more than normal allowance given during the production. You know, the 7 meter of metal and 12 meter of fiberboard includes normal allowance of wastages. So the wastage could could be more than the normal allowance or less than. Oh, so you can add here. There could be wastages that is more, maybe slash bracket or less than the normal allowance given during the production. So what are other reasons that you can think of um, for this difference here? Um, so some stock could be stolen by staff or outsiders. Yeah, correct. Then it's true. Some stock could be um, could could be stolen. So this one is the quantity actually used. So quantity which should have been used. So this one is the quantity actually used. So if they have used more probably it indicates that some stock was stolen, misappropriation of a stock. Then some stock could be left out and not calculated during stock take. Yeah. And then some stock could be spoiled or thrown away or returned to supplier, and these are not accounted for. Um, and then for each department, if there are mistake on, because the production department will record their incoming and outgoing stock, and then the store department also record their incoming and outgoing stock. So if they are mistake in recording the incoming and outgoing stock, then there will be differences. Okay, then now we look at question part E. Calculate the material cost of all stock at the end of September using FIFO basis, material stock, material cost of all stock. Material cost of all stock. Okay, so these are the quantity of all the materials. So now the question is, what is the cost of all this stock? Okay, what is the material cost of all this stock? So, okay, so metal, okay, material cost. So the raw material for metal is 11,000 for as at 30 September, the quantity. Then the completed partition is 1,002. The for the is 1,002 units times. Okay, you see the 7 meter of metal used in to make one partition. Remember, that is an estimate. That is an estimate. So what is the actual meters of metal required to make one completed partition? Okay, look at my calculation here. Okay, one partition estimated 7 meter of metals. The actual, you see over here, part C, this one is part C. The quantity actually used for metal is 45,000. Based on, let's say if you base it on 7 meter, if you base it on 7 meter usage for one partition, the quantity that that should have been used in production is 46620, but the quantity actually used is 45,000. So that means this 45,000 is the quantity actually used in production for metal, okay? And this is the quantity that should have been used if it is based on 7 meter of metal per partition. So now we have so-called a fraction here, a fraction here. So this is the correct metal quantity that was actually used in production. Okay, so 45,000 is the actual quantity of metal. This is the 46,600 is the estimated quantity of metal used based on 7 meter per partition. So that means per partition, if you times 45,000 over 46620 times 7, so the actual quantity of metal used per partition will be 6.757. Okay, 45,000 is the actual in total for that month of the metal used in production. Okay, so 6.757. Okay, so the completed partition is 1,002 times 6.757. This is the actual metal used for one partition. Will be this figure. Work in progress 600 units times 75% complete, so 0.75 times 6.757 will be 3041. So this is the quantity of the metal that is consisted metal that is consisted in the closing stock. Okay, so then what is the cost? So you see the question says it's a first in first out basis. Okay, so that means the last incoming batch of metal is $16.50. You see, if it's on a first in first out, those earlier ones would have gone out to sales. You know, the earlier purchased metal would have gone out to the to be sold, would have been sold first, then the balance would be in the stock. Okay, that means the last purchase would be left in the stock. So you see, the last purchase was 25,000 meters of metal, but the metal in all the stock, including the raw material, is 22,149. So this must be priced at the last incoming purchase price, which is $16.50. So the question part E says calculate the material cost of all stock. So the material cost of metal is will be this one times this one will be 365,46459. Okay, so similarly, the this is $8 times $ $8. Okay, so the fiber board is actually the same story, I won't repeat. So it is based on the same story and the same logic, so you can work it out. So this is the cost of the material cost of the metal, and this is the material cost of the fiber board. So add together, the material cost of all stock at end of September is 686,755. So this I have answered part E already. Okay, so then now we go to the next question. November 089372, paper 2, question 2. Okay, Bestwick Limited is planning its budget for the 6 months ending June 2009. All sales will be made at a constant selling price at $125 per unit, and sales in units are forecast as follows. Okay, variable unit cost is as follows. Overhead fixed expenses is 1.2 million a year, including depreciation, depreciation of 180,000. So all this given here, but what is the question asking? The question asks, prepare a production budget in units for 6 months, for the 6 months ending 30 June 2009. Okay, sales in July and August are budgeted to be 33,000 units per month. So production budget, okay, is the duty of the production manager. Okay, so you have to think from in the shoes of the production manager. Okay, so production, so I just think of the title, production budget in units for the 6 months ending 30 June 2009. So since all the figures looks big, I put it all the figures in thousand, so I put bracket like that. So January, February, March, April, May, June. Okay, so they are saying that prepare a production budget. So what is the budgeted production? Okay, so so that means how much must the production manager produce for each month? Okay, how much the production manager produce for each month, will be principally how much they would be selling each month. Okay, so they are saying that sales in each month is so much, and then monthly production will be scheduled so that stock of finished goods at each month are sufficient to meet one half, that means half, one half, not two half, one half of the sales forecast of the next month. So you must produce enough so that your closing stock would be able to meet half of next month's sales. The closing stock of finished goods at 31 December 2008 is 15,000. So that means the opening stock at 1 January 2009 is 15,000. So that means at 1 January 2009, I'm the production manager. I'm given 15,000 stock. Okay, so that means that will ease my burden of production, because since it's given to me, I need to produce less. So that's why less opening stock. So, but the thing is, I need to produce enough for my required closing stock. So you see, first of all, you see sales. Principally, I need to produce enough for the sales. So as given in the question, the sales for January is 30,000. So this is just copying. January, February is 35, March is 40, April is 34, May is 37, and June is 34. It's just copy from the question there. 34,000. Okay, all these figures are in thousand. So I would need to produce enough so that the closing stock of January is enough to meet half of February's sales. So January closing stock will be half of February sales. Half of February sales. So 35,000 divided by 2 will be 17.5. Yeah, you take your calculator, 35 divided by 2. 35 divided by 2 is 17.5. So February closing stock will be March, half of March sales. So this one 40 divided by 2. So then once you get it, is quite easy. So this is 17, is half of 34. This is 18.5, is half of 37. 17 will be half of 35. And then the question says that part A of the question says that sales in July and August is 33,000. So 33 divided by 2 is 16.5. So the closing stock of June will be 16.5. So less the opening stock. Opening stock 15 will be December's closing stock. Okay, then this 17.5, you see January closing stock will be February opening stock. So this is 20, this is 17, this is 18, and this is 17. So this one plus this one minus this one, you get the budgeted production for every month. So if you total up all these, the total budgeted production for all the 6 months will be 211,500 units. Okay. So part B says prepare a cash budget on a month-by-month basis for the 6 months ending 30 June 2009. The budgeted bank balance at 31st December 2008 is forecast as 75,000 overdrawn. That means negative 75,000. Okay, so I do the title, cash budget for 6 months ending 30 June 2009. So bracket, all the figures should be in thousand. So put all your columns. Bank balance at the beginning of the month, you see, 75,000 overdrawn. So if it's negative, that means it is in bracket. Okay, so this is given. Okay, so then I put here add dot dot add dot dot. You see here I want to save space so that I can show you easily, but you can actually space out. You can actually do this in one whole piece of paper. You can put add, and then you can leave half a page, then you put less payments, add receipts, and then less payments, then you space out. Okay, then once I have spaced out, I can put in all the easy figures first. Okay, so what are the figures that are easier? Okay, so now look at what are all the receipts and what are all the payments. Okay, all sales are made on 1 month credit term. Outstanding debtors at 31 December 2008 are expected to be 3750. Okay, so this one is sales in unit and the selling price is 125. So that means you can calculate the sales figure. So from this, I know my receipt pattern. They say that all sales are on 1 month credit term. So that means in January, I will receive December sales, So my customer will pay me 1 month later. So the January, I will receive December sales, which is given in the question, 3750. So then February, I will receive January sales. January sales is 30,000 units, 30,000, and the selling price is 125. So from here you can take 30 times 125 is 3750. So February you will receive January sales. Then March you will receive February sales. So 35 times 125, 35 times 125 is 35 times 125 is 4375. So this is how I get the receipt from sales figures. Okay, then payments. Okay, so so then now what are the other information? All material purchase are obtained on 1 month credit, and other expenses including labor are paid as incurred. The fixed expenses each month are equivalent to 1/12 of the total for the year. So this one is including depreciation, but depreciation is not a cash outflow because depreciation is an expense, but the money didn't go out. So what is the cash payment for fixed expenses? Cash payment for fixed expenses, okay, 1.2 million a year minus the depreciation, 120 minus 180, divide by 12. So 1 month, the cash outflow for fixed expenses will be 85,000. Okay. So there are now then what is this? selling expenses. Selling expenses. Okay, see, now look at here, all material and all, okay. It says selling expenses will be based on sales, okay. All, all material purchase, all the fixed and all other expenses, including labor, are paid as incurred. So you see, selling expenses is also paid as incurred, okay. So that means January selling expenses will be 30,000 units times $6, okay. 30 times 6 is 180,000, okay, 180. Then how much is February sales? February sales is 35,000. 35,000 times 6. 35 times 6 is 210. Then March sales is 40,000. So 40 times 6 is 240. So this is how I get these selling expenses, right? Okay, then we come to labor and production. Okay, labor and production per unit is how much? So 30 plus 8. Labor and production is $38 per unit. Okay, it's incurred as and when, it's paid as and when incurred. So incurred means when it was produced, when it was produced. So labor and production expense is $38 per unit. So January, the production is 32,500 times 32.5. So it's 1235, right? So February production will be 37.5 times 38. It's 1425. Then March production is 37. 37 times 38 is 1406. So this is how I get my labor and production. So left raw materials. Raw materials. Okay, so now raw materials is a bit tricky. So now monthly production, okay, so here there's no work in progress. Okay, so now look here. Raw material will be purchased so that the closing stock of raw material at the end of each month are sufficient to meet the production requirement in the next month. Okay. All material are obtained on 1 month credit term. Okay, listen carefully. All material are purchased on 1 month credit term. So that means whatever you purchase in January, you will pay in February. Okay, but here, this one says raw material will be purchased so that the closing stock of raw material are sufficient to meet the production requirement in the next month. So that means now we assume January. January we must produce enough. No, sorry. January we must purchase enough for February production. Okay. But January purchase will only be paid in February. Right? Okay. You see, in January, you must buy enough for February production. Okay? So you must buy enough in January for February production. But the purchase of the January will only be paid in February. So isn't it true that February's production, the raw material requirement for February's production will be paid in February itself? You know? Correct? Is it January? In January, you must buy enough for February's production. Right? But January's purchase will be paid in February. So, that means this is February production. So that means the raw material requirement for February is how much? The raw material requirement for February will be 25 times 37,500 times 37.5, which is 937.5. I mean in thousands lah, right? 937.5. Okay, so that means the 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 purchase that is for February production will be paid in February itself, right? So that means that's why this is 937.5, because 37.5 times 25 is 937.5. All these figures are in thousands, yeah. So January payment for raw materials, okay, so that means January payment for raw material will be actually paying for January's production need, because the raw material needed for January production was purchased in December, but payment is supposed to be in January. So that's why January's payment for raw material will be 32.5 times 25, which is 812.5, right? So March will be 37 times 25, 37 times 25, which is 925. Okay, this is how I get my figure. And this will be 35.5 times 25, which is 887.5. So you see, this one plus this one minus all these will be this one. So January ending bank balance will be equal to February beginning bank balance. And this one, add this one minus all this, will be equal to this. So this February ending bank balance will be March beginning bank balance. Okay, and this one will transfer to next month, and this one, and this one, and this is the bank balance at the end of so at the end of 30 June 2009. So now see, calculate the working capital of the company at 30 June 2009. Okay, you see all this, all my working here, you may not need to care, because I have already explained to you how I get all my figures. You can do the workings in your own way, according to your own. Okay, so now working capital equals current asset minus current liability. So I can put your current asset here $ thousands, because the figures are quite big, and then I underline, and then I leave some space, less current liabilities, then will be working capital at 30 June 2009. So I draw two lines. Okay, then I can put my current asset in whatever order I like. So bank balance is 10585, 10585 at calculated here. Okay, debtors. So they are saying that sales are on 1 month credit term. So that means June sales is not collected yet. So June sales will be 34,000 times 125, 34 times 125, which is 4250. So that's my debtors, 34,000 times 125. Okay, because then the creditors. Okay, so how did I get my creditors figure? So in part A of the question, it says that sales in August and in July and August is 33,000 per unit. 33,000 per unit. Okay. So that means, okay, so how did I get my creditors figure? Wait, Okay, so now so that means if you extrapolate this, okay, so that means now you can take a pencil and calculate. So what is the closing stock? What is the opening stock for July? the opening stock for July will be 16,500. This is the opening stock. Uh, so so the opening stock for July will be 16.5. So opening stock, you know, is a negative figure. Okay, it's a 16.5. So what is the closing stock for July also? The closing stock for July is also 16.5, because the closing stock for every month must be able to meet half of the next month's production, and the August production is 33,000, so half of it is 16.5. Okay, and the sales for June and July, the sales for July is 33,000 units. So in other words, the production in units, the budgeted production in July is 33,000. Okay, so that means the supposed payment for raw material in July is 33,000 times $25 per unit, which is 825. And this raw material will be used in July production. That means as at 30 June 2009, the raw material stock is 825,000, right? 825,000. So this is raw material stock. So that means this purchase in raw material purchase for July production is owing, is not paid yet. So that's why the creditor is 825. Yeah. So we have debtors, we have bank, we have creditors fill in already, raw material fill in. So how about this finished goods? Yeah. How about this finished goods? Okay. So So what is the stock of finished goods at 30 June 2009? What is the stock of finished goods? So you know that the closing stock. So what is the closing stock? What is the closing stock at end of June? Is 16,500 units. 16,500 units. Okay. So what is the value of this 16,500? Okay, for every unit of stock, you will incur material cost of $25 per unit, and then labor is $30. Labor is $30 per unit, as stated in the question, and production expenses is $8 per unit. The selling expense is not incurred yet. It will be incurred only when the item is sold. Okay, so that means per unit of stock, the value is $63 per unit of stock, times the closing stock units is 16,500. So this will be 103,900. Okay, so previously we have explained the fixed overhead have to be absorbed into the cost of the stock. So that means the closing stock material, labor, and production expenses that is incorporated in the closing stock amounted to 103,900. So the allocation of overheads into this closing stock will be, okay, you see the total fixed overhead for the whole year is 1.2 million. 1.2 million. The question says the fixed overhead is 1.2 million a year. Okay, so now you see the total production, the production budget for the 6 months is 211,500. Okay, 211,500. This 211,500 is for January to June, means half year. Okay, so that means the fixed, we're supposed to take the fixed overhead for half a year, which is 1.2 million divided by 2, which is 600,000. The fixed overhead for half a year is 1.2 million divided by 2, which is 600,000. And the closing stock is 16,500. So that means the fixed overhead estimated that's supposed to allocate to this 16,500 unit will be 16,500 divided by 211,500, which is the total production for the 6 months, times these figures, which is 600,000, which is the fixed overhead for half a year. So the allocated fixed overhead, estimated allocated fixed overhead for this 16,500 units of stock is so much. So add together, the estimated stock value of finished goods is 1086,300. So 1086.3, because this figure is in thousands. So I have explained how I get all the figures already. Stock, finished goods, stock, raw materials will be equals to so much. Okay, then debtors, bank balance, and then current, this is the current liability, creditors. So this is how I get my working capital figure. Okay, so you should practice thoroughly. Okay, thank you for watching. Bye.